Let's pull in Stefan Kooths from the Kiel Institute for the World Economy. Stefan, welcome to Made in Germany. Thank you for being our guest today. I gotta say, for a while, it did not look like there was going to be an agreement in Brussels. Cyprus had to swallow some hard compromises there, harder even than what he would have had to take if he had gone without this controversial referendum. Is it safe to say his gamble didn't pay off?
Obviously, it did not, but it has put another burden on the whole process, the reform process in Greece. The most important currency here is trust. This is what we need. We need a government that really accepts the reforms as something that is in the very interest of the country and not against the interest of the country. And having a ruling party that has said over and over again that they think that these reforms are harmful is not a very reliable partner for pushing through very tough reforms in this country.
What about Germany? At the negotiating table there in Brussels, did Germany have to give up anything that it wanted?
Well, the sums that we are talking about are much higher than we thought 2, 3, 4 weeks ago. So the very fact that we have another third tremendous program is definitely something that shows that not only Germany but also the other European partners are willing to support the country, to give the country even more time to push through these reforms. And we should stop thinking in this controversies. What we need is a European approach. No one wants to humiliate anyone else. There's a lot of misunderstanding involved in this process. What we need are sound economic reforms, and they are in the interest of everyone, both in the interest of the Greek population, but also for the creditor countries in the other 18 euro area countries.
Let's talk about sums for a minute here. 50 billion euros worth of state funds in Athens are going to be privatized and held in a fund in Luxembourg. How is that going to work?
This is a very optimistic view, and we don't think that the revenue aspect of privatizing parts of the economy is the crucial part. What is more important is to bring the capital stock or parts of the capital stock into private hands who have an entrepreneurial approach to do something with these assets, to really make them productive again. This is much more important than looking at the revenues. This, from our perspective, is extremely optimistic, and probably we will not see 50 billion euros to be earned by selling these assets.
Stefan, times are clearly still tough in Greece, and this after 2 bailouts coupled with harsh austerity measures. Why should a third time be the charm?
This is an open question. We are just trying it a third time, but it's more than questionable whether this time will be more successful than in the previous 2 attempts.
Okay, that sounds very open. Would Greece have been better off just leaving the euro to begin with?
No, I don't think so, because the euro is a stabilizing pillar also of this economy. It is a worldwide accepted currency, and a national currency in Greece would create even more monetary turmoil, maybe even a hyperinflation. And this is nothing that would help the country in restructuring its production structure.
And it seems that most Greek people agree with you. When you look at the polls, they want to stay with the euro currency. Let's talk about backlash, though. Germany has taken a very hard line with Greece pretty much since the beginning, always insisting that austerity has to be coupled with any bailout. And they've gotten a lot of criticism for that, especially recently with this hashtag, "This is not a coup." This is a coup, excuse me. What do you make of that?
Well, their austerity policy is just the flip side of the crisis. It's the symptom. It's not the cause of the crisis. This country is still consuming more than it produces. So it has a clear problem in terms of economic performance. And now we have to adjust the living standards to the actual capacity, the production capacity of this economy. This is extremely hard, no question about that. But again, the reform process must now be #1 on the priority of policymakers, not any new injections for short-term consumption programs.
Stefan Kooths from the Kiel Institute for World Economy, thank you for being our guest today.
You're welcome.